nine, eight, seven, six, five, four, three, two, one.
Hello, everyone. My name is Yi Shi, and I am a venture fellow here at Newchip. At Newchip, we are trying to build a global online community for startups. Our accelerator not only teaches founders to grow, we also connect them to people. In this panel discussion session, we are going to talk about growth of entrepreneurship in Asia. Asia remains a very attractive region for tech investors for several years. This is because of the rapidly digitizing population that demands online services and many industry sectors adopting new technology to transform their operations. Today, we are honored to have 4 panelists join us. Each of them has an amazing background and lots of experience in fundraising and investing in Asia. So let's start this conversation by introducing everyone here. First, we have Ms. Ashley Chu. Ashley, do you want to introduce a little bit about yourself here?
Yeah, sure. Hi, everyone. My name is Ashley. Very pleasure to be here. I'm an ex-Amazon, so I'm currently a private equity and venture capital investor, and I'm an advisor to startup in the Silicon Valley and also Singapore. So my main focus is in Southeast Asia, but I do advise startup in the Valley and also in China and other part of Asia as well. And my focus sector would be in e-commerce, consumer, logistics, as well as fintech.
Thank you. Next, we have Mr. Sudheer Kuppam. Sudheer, do you want to start by introducing a little bit about yourself?
Sure. Thank you, Yi Shi. So, I spent about 2 decades in the venture capital space, was head of Intel Capital Asia when, we invested in a lot of successful companies. Some examples, Paytm, Policy Bazaar, India Mart, etc. from India. And of course, I launched my own venture capital fund, Epsilon Venture Partners. It's a small fund. It's a 5-company portfolio, which I'm managing currently with my other partner, Mahesh. And basically, we are also in the business of buying venture capital assets, given the fact that India is a market where you generally don't have exits, but then you have a whole bunch of GPs investing with a lot of oversized portfolios. And the fund timelines, unfortunately, are finite. So we are actively in dialogue for purchasing secondary assets in the venture capital space.
Yes, thank you, Sudheer. Next one, we have Danye Wang here. Danye, do you want to talk a little bit about yourself?
Yes. Hi, everyone. Super honored to be on this panel. My name is Danye Wang. I grew up in China, have been in the US for more than 15 years. I'm joining this discussion from New York. So before I become an entrepreneur myself and also involved in venture investing and cross-border investment work, I used to work at BlackRock, one of the largest asset managers of the world. And I was in a client-facing role, basically handling relationships with Asian institutional investors and also strategy work. About 3 years ago, I became an entrepreneur. Myself, I started an education technology company, which is now a Series C company called UniCareer. And we focus on a cross-border international talent career development and job placing. So we work with large corporations like Alibaba and those from Asia in terms of recruiting returnees, as well as top universities like Columbia, Cornell, etc. I also co-founded UniGlobe Capital, which is my own a firm for venture investing, as well as family offices and fund manager advisory firm. So I specifically advise a selective number of Asian fund managers. Some of these are VCs in their fundraising activities here in the US. And I also advise a few Asian family offices in their investment in the US, both funds, mostly venture and private equity, as well as direct deals. So in general, I do a lot of cross-border work between US and especially Greater China, and looking forward to the discussion today.
Excellent, thank you. And Xiaochen, introduce a little bit about yourself.
Sure, thank you. Yeah, my name is Xiaochen Zhang, and president of FinTech for Good. And from the name, you can see that we are a for good company, and we identify the most impactful blockchain fintech solutions through our incubation, acceleration, investment program. We bring them to different market, mostly addressing the sustainable development goal related problems. And from in the past few years, that's we incubated around 50 some companies, and we raised a crypto fund in 2018 and invested in around 10 companies. And this year, that's our main focus are 3 acceleration program. One is on digital innovation for sustainable housing. We are looking at how digital innovation like blockchain, which can just help to transform the housing market. And then another one is on food tech for Texas, and where that's again that way you're looking at the digital innovation to help SMEs in the food sector to deliver service in a better way. And the third acceleration program is around the digital financing for SDG. And on August 26th, the UN Secretary General Digital Financing for SDG Task Force will launch the final report with recommendation, to just see the emergence of a citizen-centric financial system. And we are very excited to just using this accelerator to just identify those citizen-centric innovations, and through our help, then they can just deliver results. And as you know, I'm a Chinese living in DC, and our program is very global, but definitely has a strong US and China focus.
Yes, thank you very much. It's so exciting. So now actually let's kick into the topics. As we all know, it has been over 6 months since COVID-19 pandemic started. With your recent experiences and conversations, maybe with startups, with founders, with investors, what are some of the impacts and challenges that Asian entrepreneurs are facing?
Sure.
Yes.
Sure. So as you know, my expertise is in e-commerce, logistics, and fintech. And I have very heavy focus on Southeast Asia, so I'll focus on discussing these sectors. So in Southeast Asia, the penetration of the online shopping has been historically lower than the other part of the world, like the US and Europe, and they don't really use digital payments or even credit card in a large part of Southeast Asia. So about 80% of the region's populations were kind of underserved by the financial sector. And but the pandemic has occurred, many consumers has undergo some sort of financial stress. It's like a waterfall. So when consumers have less income to spend, then they would just buy less stuff on the market. So the essential is still the essential. So they still need to buy food. They still need to buy the household stuff. So the discretionary consumer sectors like the luxuries, consumer travel is definitely not doing very well. While the essential segment like the food delivery and some part of e-commerce, those are booming. So because the e-commerce is doing well, people are spending more money online. Like I said, because it's like a waterfall. So the digital payment is doing pretty well. And it's quite beneficial from the e-commerce sector. So in other words, the pandemic is kind of accelerating the e-commerce and the fintech adoption in Southeast Asia, making Southeast Asia catching up with other parts of the world faster. And as for the B2B business, the corporate clients are operating on a more contingency plan. That means the sales cycle for the B2B model are kind of delayed. So we've seen some of the delay on the account receivable on the B2B model. So due to all these conditions, the startups originally focus on the top line, now focus a lot more on the cash management, focus a lot more on the runway. While they focus on that before too, but it's more emphasis in this part of the financials management. And it's a good problem for some of the sectors, but not necessarily for the other sectors. In terms of the fundraising wise, I would say that the markets are pretty much closed for the bridge rounds. So if the startup didn't get to do the fundraising before the pandemic, then unfortunately it would be much harder for the startup to fundraise during this time. Unless they look for the distressed investors, which we've seen increase of the interest in the distressed investment in Southeast Asia. But if they've already raised during the pandemic, before the pandemic, then they should have some sort of runway to survive during the pandemic. So these are some of the operational impact that I've seen in Southeast Asia.
Excellent. Yes. What we see at Newchip is similar, especially a lot of commercial side e-commerce companies we have in the cohort has been hit really hard, CPG especially. And we also see a lot of other, but essential, like you said, essential businesses are always, especially in this time, are on top of the game. So what do you think, Sudheer?
Well,
in this topic.
So in our portfolio, we had mixed results, right?
Yeah.
In all these aspects. So we have a company called Pi Data Centers. They are in the data center cloud business in India, and they are, you can pretty much call them the Equinix and AWS of India.
Yeah.
So for them, unfortunately, their fundraise has basically dragged a little bit, in the sense they started the discussions pre-COVID, and suddenly with all these lockdowns, naturally fundraising discussions have basically just dragged on. But we are hopeful that in the next 2 months, it will come to a positive conclusion. That's one. With respect to customer traction, I think, fortunately, if you're in the cloud space, then because of COVID, it's actually a positive that everything is moving onto the cloud. So naturally, that rising tide will also, help your business. But if you have to do, kind of in-person sales, which some of our other portfolio companies have, for them, they are kind of at a stagnant revenue with no growth from last year. So that's been our overall impact, at least within our portfolio. But outside, if you also look at some sectors specific to India that have completely heated up, EdTech is one. So India is one geography where venture class hasn't seen that many exits, unlike China, which is a money spinner, if you will. So basically, EdTech has become so hot that just in the last 6 weeks, Byju's acquired 2 companies with no revenues, one for 150 million, the other one for 300 million, all cash. So that's basically, it's a testament as to, how COVID is impacting various sectors.
I see. Yes, that makes sense. I think next we will talk to Danye about, since you are a founder yourself as well, and also a venture capitalist. What do you think under this climate? Like, when you talk about like fundraising or investing, what are some impact and challenges?
Yeah, I actually think this is a really good question and important to address at this very special time. And I think COVID, because most of us are working from home and not really traveling and trying to run meetings after meeting, conference after conference anymore. It actually give us this space to really reflect on our business and kind of the ecosystem. So I want to specifically talk about people, money, and strategy. And these are all very important in terms of running a business. And it's not just about for Asians, but for entrepreneurs across the board, right? So when it comes to people, we all know, given COVID, especially in the US, is lasting longer than most of us anticipated, it's harder to hire people. And even if we hire people, it's harder for the onboarding process because it's just very challenging for people to get a real sense of the corporate culture and the vibe of the business. And it's challenging for them to feel the immediate attachment to the firm. So more than ever, it's important for leaders and entrepreneurs to step in and be that culture carrier and establish more frequent communication. And I try to do that as much as I can in my own organization. And during this time, entrepreneurs need to make some difficult decisions, unfortunately, including moving certain roles, cutting certain roles. My education business, UniGlobe, actually runs a small office here in New York and a much larger presence in mainland China now across 4 different offices. And we actually decided to move some of our servicing people back to China. And we ended up essentially, these people left the firm and we ended up rehiring from China. But it's not just about cutting costs and moving people. It's more about developing a process and system in place to ensure and continue that customer experience given the time zone difference issues. So that is important from a people perspective. So in my conversations among my own ecosystem and with other VCs, a lot of us are spending more time just managing existing portfolios and focusing on operations and value add to existing investment versus just constantly looking for additional investment. And from an entrepreneur's perspective, how we spend that money is also challenging, right? My own business, we used to run a lot of offline events, sponsor student organizations to promote services. And now a lot of that activities had to stop. Ed tech in general is popular. The specific segment that I am in has also faced a lot of challenges. So it's important for me as an entrepreneur and leader to reevaluate my assumptions and desired outcomes and constantly adjust. And in terms of strategies, I just want to quickly comment. It's not just about what you have done. It's more about what you will do. What have gotten us here will not necessarily get us there, right? So I've seen a lot of companies pivot or at least fine tune or even sometimes completely change their strategies. But the silver lining here, I want to say, is that COVID really pushed the innovation cycle and human behavior cycle forward 3 to 5 years, meaning some of the trend that would happen anyway, but take a lot longer. Now COVID made these changes happen much faster. So there are actually a lot of amazing growth stories. So choosing the right strategy is important, but defending your place in this market is also crucial. Taking Zoom, like we're all using Zoom for conference call these days, for example, now actually face a lot of scrutiny given security issues and also facing tons of competition from players like obviously Microsoft, Facebook, but as well as new startups like Run the World, Remo, etc. So I think as an entrepreneur, but also as an investor, we all need to be nimble and quick in taking actions, but more importantly, really need to clarify and truly develop a strong core competence. Only with that, we can continue our success.
That's very good points made, Danye. So last we have Xiaochen here, more like into the financial industry, especially in blockchain. So what do you see and what's your perspective here?
Yeah, and so it's interesting, for the blockchain sector, it's a little bit different from, other sectors. And, when there are the token-based model, there are non-token-based model. For the token-based model, it's really, the Bitcoin price impact more, to the business than any other, external events. So when the Bitcoin price now rises above $10,000, and a lot of online activities, communities becoming more engaged, and then the entrepreneurs face much less pressure because when they just lease the tokens, if the Bitcoin price rise, and then everyone continue to just invest or trading, and then their life is not too bad. But for the non-token based blockchain, solution, and then it's a very different story. And if you are a 2B type of platform, and because other platform, have due to the uncertainty, they are re-evaluating their innovation strategy, and especially to review their budget, what they can cut. And then many times that you see that a more innovative program will be cut from the beginning to avoid any kind of risk. So as a blockchain-based solution, mostly are regarded by many businesses as early, innovative, and also are easy to lose funding. So for the 2B blockchain type of company, they face more challenge due to the uncertainty. And we also see that in the broader technology community, and we definitely see that COVID-19 just is creating a new sector called touchless economy, and where that's almost all sectors are now looking at touchless components. And if you don't have that touchless component, you probably will face huge challenge in the next year or even two. And one example is that just last month that I was a co-chair of the Transport Research Board and the ACRP program, where that we organized a blockchain for airport event, participated by more than 300 folks from different airports, from airlines, and all of them actually are now, due to COVID-19, and started to think, how can we take this as an opportunity, and to just re-evaluate our business and see where are the opportunities that any way that we are disrupted by COVID-19, and now this is the opportunity for us to just assess the whole value chain and see where that we can just make changes, and not only to just deal with the challenge, but also create new models and make us more competitive. I think that's really very positive. And then you just move to, for example, a learning sector, and you have totally two different side of the story. When you just look at the traditional learning tech, and they have ad tech, they have a lot of challenge to sell to B, because universities face huge challenge if they don't open, or if they move totally online. And many universities lose like $100 million from the revenue side. So then they have to cut a lot of ad tech related program. And so that's a very difficult challenge for them. But then for a lot of digital learning infrastructure company, and then they actually just are seeing a booming in the past few months, where that all the educational organizations started to reaching out to them, and then learning from them, and also try to partner with them and to make offer as soon as possible, because this is really like the offer should be there yesterday, and then they need to to really make it out today or tomorrow. So that's why the demand for their service is becoming like increasing dramatically, and that's also gave a lot of constraint to their client service related function, and which we see because many of those functions now have to be home based, and sadly that you are seeing a crazy increase in your client base, and without having a face-to-face kind of strategy planning process, and then a lot of client service component cannot really just meet that need, and then that's just create another round of challenge. From the investor side, it's really interesting, because investors are really a special group of folks who are dealing with innovation every day, but are really reluctant to change. And one good example is, for due diligence process. And for most of the investors, that's, in my network, that's without face-to-face, nobody want to just make investments.
Yes, thank you so much. These are all great input. And I think all of you touch a little bit about the points that I'm making, the top points I'm talking about later, especially we talk about what are the current some trends and criteria you're looking for when investing. And especially in Asia, I think it's such a place full of talent and innovation. Major cities like Mumbai, Hong Kong, and Shanghai are all like hotspots for new startups. So this is my next question. What are some trends and criteria? And especially, I think most of you talk a little bit about it, like especially essential businesses and also online services, since everything is moved online. So currently, maybe just talk a little bit more about what are your criteria? In other words, what is the good, the bad, and the ugly? So we'll start with Ashley.
Yeah, sure. So in terms of the investment criteria, I think that we always look at those like the market opportunities, the business model and all this. But to myself specifically, I've been working in private equity and now more in venture capital. My criteria has always been like the three main things. First is about founders. I think great founder can really make any startup take off. And although the past experience is very important, but I think that their potential and how they think, the thinking process is the most important to me. Second very important point to me is the operational plan, like how they acquire the customer, the user base, especially to the B2C business is extremely important. And I think also very important to have the unit economics of the business. The third very important criteria to me is the product. Through my years working in Amazon, so I started actually as a product manager in Amazon. So I really focus on building a product that customer would like to use. So focus on the customer experience, the CX. So that's very important at building up a new product that customer would actually use it. So these are the main three criteria. In terms of the trends, I think in Southeast Asia, especially in Singapore, except for Singapore, most of the economies are emerging markets in Southeast Asia. So the trends have been more about filling in the gaps and the adoption of new way of living and new way of financing and the new technology that they did not get exposed to before. And from the investment perspective, these are great opportunity for investors. In terms of if you ask me about one bad thing about Southeast Asia investing is, I think like Indonesia right now, the investment scene has been getting pretty competitive. So it's harder to get a good deal and harder to get a deal that has good valuation. That makes sense. But on the other side, there are some good trends as well. Like Vietnam has still be pretty much untapped by the investors. And Vietnam is especially benefiting from the US-China war because most of the, a lot of the factories are moving over to Vietnam these days. And I'm actually expecting more activities and investments, ventures happening in Vietnam. And also for the Philippines, I think it's also quite attractive as well in terms of the valuations because it's got less developed in terms of their venture capital and startup ecosystem. But for the fundraising perspective, like as I mentioned to me in my first section where I talked about the fundraising earlier, I think it's getting harder during the pandemic. Even for myself, I'm fundraising a venture capital fund in Southeast Asia right now, and I found that to be harder, as Xiaochen just mentioned earlier, that face-to-face is quite important in the fundraising, and it's just hard to do the face-to-face right now. And Asia specifically, they require the face-to-face time a lot more than in the US. So I think in Asia, that's a very specific cultural aspect.
Yes, yes. So Sudheer, as like especially in the India market, what do you think about the investment in general?
So I think Ashley touched upon a lot of points, which also kind of, they play along with respect to the Indian venture environment. While India has 1.3 billion population, it's again assimilation of a lot of languages and cultures. So their official languages are 12 and unofficial are 25. So naturally, you have a lot of Vietnams and Indonesias included in India. So with respect to, my own investment thesis, I usually go by management team. If I basically get convinced that the team can execute on whatever the idea is, whatever the market segment is, then historically that's when I basically tasted success. Over 2 decades, I have invested in close to 90 companies and had roughly 32 exits from those 90. In general, the other interesting trends that we are noticing. So one that I already stated, EdTech and cloud, those two are definitely going gangbusters. The other interesting trend in India, the median age of India is 27. So it's almost like Indonesia, a very young population. So 1.3 billion, when you take median age of 27, you can clearly see that, very recently Economist published an article. It's called Time Pass Economy. So, a lot of these kids and young people are basically spending time on their smart device, consuming content, whether it's TikTok, which is now banned in India. But now that's gave birth to 10 more Indian versions of TikToks, right? Which are all being funded by venture capital. And similarly, mobile shopping, mobile gaming, all those are kind of experiencing growth trends, which naturally, when businesses and markets actually demonstrate, 4 to 6x growth within a span of 2 quarters, whether it's COVID or not, investor will definitely, write the check. So it's a virtuous cycle. And unfortunately, India's problem is lack of exits. And so that is something that should give in at some point, hopefully in the next year or two, so that, India also becomes like China and the US, where you have a steady stream of exits so that LPs are basically indeed getting back capital.
That makes sense. Yes. Thank you so much, Sudheer. So let's switch to Danye, especially you have operation in China and may invest in a lot of some Chinese companies as well. China especially is a hot market for startups, a lot of startups emerging from China. So what's your take on this talk point?
Right. So my own investment criteria, my personal investment, I write, relatively speaking, smaller ticket size, but the investments that I personally seek are those that I can be value added on a specific personal level. For example, I'm evaluating 2 fintech firms right now. One is US based, one is China based, where I think my previous background at BlackRock can be specifically value added to them, and they can benefit from my investment, not just financially, but also strategically. So I just want to point that out. But to your point, Yi, I also work with a lot of GPs in China, and they invest across the board. And a lot of them have fascinating investment opportunities, even during COVID. And to your specific question on the good, the bad, and the ugly, I want to share some comments. First of all, on the good. So there is this significant reverse of copy to China before and now copy from China. Consumer sector specifically on many dimensions are actually way ahead of the global market. Even some of the recent IPOs like PDD, Pinduoduo, Bilibili, and the whole wave of short videos, live streaming. Although there is some controversy related to TikTok these days, but still there's a growing trend, especially in the consumer sector, that they're able to reach their customers through short videos and live streaming. And that actually were able to boost their revenue and sales even during COVID. And China itself, to be honest, has came out of COVID faster and stronger. I remember I was actually doing a series of calls back in April and May with large institutions in the US allocators who are actively following how China has came out of COVID and thinking that that trajectory and that specific pathway might have implication on how US would follow the same path. However, obviously we all know that US have a very different story. But the thing I want to point it out is that if you happen to be a startup and entrepreneur who are able to act fast during and immediately after COVID, you actually have a very good value proposition there. Pop Mart, for example, in Chinese, 泡泡玛特, it's this small figure toy in blind boxes. This company actually have done amazingly well, and they navigated COVID through their online digitalization and how they manage their offline stores, and also how they were able to brand and develop contents focusing on defending COVID together and really actually encourage the community to come together under their brand image. So I think that's a very powerful story from a Chinese entrepreneur and company. And the other comment I want to say is that US-China trade war and all the sensitivity around the topic is actually forcing China to develop its own hard technology or deep technology in a much faster pace, because they cannot rely on the Western world anymore in terms of borrowing or copying the technology. So that actually reinforced China to move even faster on certain segments. In terms of the challenges, or I guess the bad, it's challenges, but also opportunities. In the last 30 years, a lot of wealth creation in China was generated through, for example, real estate investment, or copying from the rest of the world. And they were able to really steepen the learning curve and scale in China quickly. It's not going to be the same going forward anymore. Aside from consumer space, the two specific verticals that I'm focusing a lot of energy, and I know my GP relationships are also betting heavily on, our enterprise sector as well as healthcare sector. And I know a lot of US allocators are also extremely excited about the growth of these sectors. In the enterprise sector, the reality is that the gap between China and the rest of the world is over 10 years. So there is no so-called Salesforce or S&P or the Oracle of the Workday of the world in China yet. But in the next few years, we're going to anticipate a lot of these coming out. And healthcare market has huge potential as well. The healthcare market is expected to reach close to 200 billion yuan, which is equivalent of $300 billion in 2026, and increasing 10 times from 2016. And Ashley commented a lot about Southeast Asia. I think there's also a growing trend of China exporting their people and strategy and technology to Southeast Asia, but Southeast Asia has its own challenges and become extremely complex, right? So I think there are going to be more and more local entrepreneurs in Southeast Asia, both learning from, but at the same time competing with entrepreneurs that are kind of exporting from China. And I want to quickly comment on the ugly, because historically Chinese companies love to go to IPO, and I know Sudheer commented on exit being challenging in India. It's also challenging in the US, which is why a lot of Chinese companies love to go IPO in the US for both prestige and liquidity. However, this whole process is undergoing some serious scrutiny in recent times, triggered especially earlier this year by incidents like Luckin Coffee, but more importantly recently by US policymakers as they're rolling out new rules that all Chinese companies will need to comply with in terms of accounting and financial standards. So I think it's very important for Chinese companies or Asian companies across the board to pay more attention to financial numbers, accounting standards globally, especially those who want to go IPO in international market or develop an international presence. Achieving international trust probably is going to take a lot of time, but it's extremely important, not just for a single company, but for the whole ecosystem and the global image.
With so many things going on around the world, sometimes we just never know what's going to happen next. But what we can do is just sometimes stop and then adjust and adapt to the new environment. Because we believe that pandemic is going to over eventually. It's just about how you can adjust your strategies and also learn from others, talk to a lot of people, and try to see what's the future, and then also improve yourself, improve your own companies to grow better in the future time. I think our time is coming. It's almost 1 hour. So thank you very much for your participation today. Again, it's our honor to have you join us. Your input and expertise are definitely useful and valuable for all the startups and even some investors we have in the program. So I will conclude our session today. Thank you very much and see you next time.
Thank you.
Thank you.
Thank you.
Bye.